Hi, welcome to our home buying webinar. We appreciate you so much for being here. We know that you have busy schedules, and so we are going to make this next 20 to 30 minutes very efficient for you. We're going to talk about buying a home, getting your lending done, as well as helping you improve your credit so you can take advantage of the best rates in our current market. My name is Mickey, and I'm one of your presenters today. I'm a realtor. I've been a realtor since 2004. And I really love doing these webinars where I'm teaching, educating people to not only get ready to buy, but every step of the way, I'm going to walk you through every step. One thing that a lot of people have given me really good reviews on is educating them along the way. So I really appreciate you guys being here so that we can teach you, how to buy a home and make a really smooth transaction. I'm going to hand it over to Angie.
Hi, everyone. Thank you for joining us. I am Angie Sandoval. I am a loan officer, and I have been doing home loans since 2004. My job is to help you get prepared to present your finances to a bank to help you secure the best available terms for whatever type of loan that you need. So I will walk you through that entire process today.
Yeah, great. Okay, so why are we here today? One reason you may have joined our webinar is that you are dreaming of home ownership. Maybe you want to stop paying rent and start building equity. Maybe you want to just paint your own walls instead of keeping everything in your home white, right? You're ready for a place that's truly yours. You want to lock in today's opportunities before the market shifts, or you're wondering if now is the right time. Is now the right time? We were just reading an article that came out by NAR, National Association of Realtors, and they said it's October 12th through 18th is the best time to buy in our current market. So we'll talk a little bit about that. If anyone's interested in reading that article, let us know and we will send that link to you. All right, so let's get started on the home buying side, and then I'm going to toss the baton to Angie, and she's going to talk about lending. But it's really simple. I simplify my process by just making it 10 easy steps. And I want to tell everyone, congratulations for being here today. It's like you've met with a realtor, right? So step number 1, you're meeting with a realtor. Step number 2, you're meeting with a lender. You guys have all checked those boxes here today. And of course, for those of you on our webinar today, we want to get to know you and have a really specific consultation with you to find out what you're looking for, what type of home, what you must have on your list, maybe things that you don't want to have on your list. So that's what I'm here for, is to be your personal shopper. So once you are qualified with that lender, we go right into shopping. Now, nowadays, we're all, we got our hands on our phones all the time, right? So we're shopping or we're scrolling, looking at every housing website there is, looking at new homes all the time. So you can absolutely continue doing that. But one thing that I do is I'm going to be like your personal shopper. I'm going to listen to the things that you're looking for in a home, and I'm going to eliminate the homes that are overpriced, eliminate the homes that are too small, and eliminate the homes that just are not what you're looking for. So that's where I come in as the realtor. I can spot deals too. I'm going to bring it to your attention like, hey, did you notice this one over here? Blah, blah, blah. So that's what my job is, to look for those homes and spot those deals for you. In addition to, making the transaction go really smoothly, being an excellent communicator with you and any family members that are involved in the process. After you go shopping and you identify your favorite home or homes, we're going to be writing offers. I'll walk you through, as you see, there's 10 steps on here. So every step of the way, I'm going to be walking you through additional steps within these steps. So when we're writing offers, I'm going to explain your offer to you, what it means, how much deposit is written in there, that those things I'll explain to you. Everyone's situation's different. So maybe you have a different down payment. Maybe you have a different timeline. Those are all things that we discuss in the offer. And again, to make the transaction move smoothly, I want to get to know you, your family, your needs. So when we write that offer, we're asking for the things that you need or you want in your moving process. one of my favorite parts of my job is negotiating. So I'm going to be negotiating on your behalf. Once we secure a property, then we're going to open escrow. And now a common question I get with escrow is, what is it? Right? It's two things. One is it's a brick and mortar building with a human sitting at a desk processing paperwork for us. It's really simple, right? So our escrow officer, she's basically going to pay the bills, she or he, right? Is going to be paying the bills, and they're going to make sure your name goes on title at the end. The second meaning is its timeline. So you'll hear me or Angie say, 30 days to close escrow, or we're closing escrow next week, or, oh no, this is too short or too long of an escrow. Whatever you may hear us say, we're referring to escrow as a timeline. So, there's a lot of things that we're doing once we open escrow. We're, processing a lot of paperwork behind the scenes. So we're moving on to step 6. We then, I'll facilitate your inspection as well as your disclosures, which is our paperwork. There's 3 types of paperwork. We have the disclosures, which go from the realtor to me, and that's everything the seller says about the property. We have the escrow paperwork, and then Angie will have paperwork for you too. So as we're processing these things behind the scenes, the contract defaults to 17 days to do your inspections and investigations on the property. And that's something that I facilitate for you and answer all of your questions regarding this home. After your timeline is up, then we remove our contingencies in writing, and then we go directly into waiting for that loan. Now, our lender who's on this call, we're working together, right? So we're a team. I'm going to help you get the house, and your lender's going to help you get the money for the house. So while we're investigating that property, Angie's behind the scenes and her team are processing the loan. So she's doing that. The reason why this is step 7 though, is once we're done with our inspection timeline, the next step in terms of signing and things is that loan. Now, a common question on this step is, hey, we're waiting for approval. What are we waiting for? When is escrow closing? A common question people always want to know about halfway through the transaction. Well, one thing that happens let's back up to step 2, you're getting pre-approved with your lender. But on step 7, you'll hear us say, oh, we're waiting for full approval. And you think, why am I waiting for full approval? I already was approved on step 2. Well, what happens, a simple way to explain it is you, the buyer, got approved at step 2. And during step 6, the house was getting approved. And together, step 7, both of you are getting approved for a full loan approval. So that's what we're waiting for on that step. Once we have full loan approval, then you're going to sign what's called a closing disclosure. Then after that, you're going to sign your loan documents, and our amazing escrow officer is going to submit it to the county, or will fund the loan, the funding of the loan. Sorry, I'm already on step 9 because 7, 8, 9 go really quick. Step 9, you're going to fund the loan. That's your down payment, your closing costs, as well as the money from the lender. That's considered fully funded. And then our escrow officer is going to submit it to the county so that your name goes on file. As soon as your name goes on file, I get to hand you keys. That is the day we get to all celebrate.
Hey.
Yeah. So on our step 2, we said we're going to talk to a lender. When the lender gives us the green light to go shopping, and we can actually look at homes and start writing offers on those homes, that's when we get the green light. So I'm going to toss the baton to Angie so she can talk about how you can get that green light and go shopping for your new home.
Yes. So as she said, the baton will pass to me. And in this phase, I'm going to take you through what the bank is looking for to get you financially ready to buy this home. So one of the most important conversations that we're going to have is going to be covering what we like to call the CIA method. And it's not as scary as it sounds. We'll be talking about your credit, your income, and your assets. And all 3 of those things make up the loan approval and what your financing details are going to look like, as that can be different for every person. So first place we're going to start is credit. And that's why we're here today, is to make sure your credit is in a healthy position to get you the best rate, terms, programs out there. So most of the time when people are thinking of credit, they're going to see credit. If you're using anything like Credit Karma or monitoring your credit through an app like from your credit card or your bank, that credit score is going to be different from what you see on a mortgage application. The reason is a bank's pull on your credit is considered a mortgage inquiry, and mortgage inquiries are rated very highly, or I should say the algorithm, the calculation to determine your credit score is really strict. So they're going to look at all your credit history. And so a lot of times your credit score may not be what you think it is from looking at the app. So it's always important to go through this step with a lender so you can officially see what your mortgage credit score is going to look like. So as you can see from this chart, we have, credit scores ranging all the way up to 850. And that's considered excellent. So if you're between that 780 to 850 mark, you're going to have availability of the best rates, the lowest, which means the lowest interest rates, best terms on a mortgage. But that doesn't mean that you have to be that high in order to qualify for a home. The lowest you can be to qualify for a home is going to be actually 520 of a credit score. But that is in not a great position. It's going to give you least favorable terms, and you're going to have to come in with a very large down payment. So really where you want to be is going to be that 680 and above mark. And the reason for that is if you were looking for down payment assistance programs or any kind of grant program that might be available from the city you're purchasing in, most of those programs are going to require at least a 680 or better credit score to apply for those. So that's really the credit score you're shooting for. If you notice on the bottom of the screen, it says protect your credit. That website is a place that you can go to protect your information. You are letting the bureaus know that you do not want your information shared. So anytime you get your credit run, the bureaus do sell your information to other solicitors. Now, that's supposed to stop sometime next year in March, but I have a feeling it won't be a perfect system. So make sure you go to optoutprescreen.com. It takes about 5 business days to take effect. It's free. It's just to let the bureaus know not to sell your information. And they don't sell your social or birthday. They're selling your name, your phone number, and an email address. So you'll get a lot of solicitations if you don't fill out the information on that opt-out pre-screen. All right, so let's talk about what makes up a good credit score. Now, you might be wondering, okay, well, I've had maybe some credit challenges, not sure where I should start. Let's talk about what gives you the most bang for your buck when we're talking about credit. Now, in a perfect situation, you're going to have a very balanced credit score with history from credit cards. We call that revolving debt. Or installment loans. Those can be things like timeshare loans, car loans, student debt. Those are all going to fall into those 2 categories. And then the third is the mortgage. But that's why you're here, right? To learn how to buy a home. So you're not going to have that part of your credit filled out just yet. So where can you affect change? I'm not saying go out and get an installment loan. Definitely don't go get it if you don't already have it. But where you can affect the most change is going to be in your credit cards. As you can see from the chart, 35% of your credit score is going to be made up of your payment history. So if you had some challenges in the past, maybe had a couple of missed late payments, that will naturally correct itself if you just stay on time from here on out. But your credit score may not move unless you control the balances. So the general rule is 30% of your maximum you should never exceed. So let me give you an example. If you have a $500 maximum limit credit card, you don't want to go over $150 balance every month. So you want to make sure you're staying at $150 or less per month. You can pay it off every month, or you can just make sure the balance stays there and doesn't exceed and just continue to make payments. And that'll be the same for any credit card. That will be your fastest way to get your credit score to move. If you already have credit cards that are above 30% of the maximum limit, today you're going to want to start making a plan to pay those down, and that will move the needle on the credit cards. Now, when it comes to things like collections, charge-offs, do not touch. Leave those alone. They've been settled. You don't want to wake up a sleeping monster is what we call them. However, collections are a different story. Some collections are easy to deal with. The typical rule for that is if the balances of those collections are $2,000 or less, then you don't need to pay them off. Just let them be. If they exceed $2,000, you have two options. Option one is it's going to get calculated against you in your debt to income ratio. So what you ultimately will qualify for will be affected by those collections. Or option B, you can choose to start to pay them off and settle those debts out. And you'll want to do that if you take that route as soon as possible, because the initial hit to your credit is going to be a ding. It is going to drop your credit initially. But once it's a resolved collection, your credit will start to heal. So that's something you'll want to take on as quickly as possible. Now, let's see. Next thing we have, let's talk about the I part of our CIA method. So that's income and employment. Banks are looking for a 2-year work history. Doesn't have to be the same job. As long as it's the same line of work, that's okay. If you've had breaks between the job, maybe maternity leave, an illness, or caring for someone in your family, those are explanations that are acceptable to make up maybe why you may have fallen short of last 2 years. Schooling also counts. So oftentimes we have professionals like a nurse or a teacher who has maybe 2 years of school history, but has only been on their job for 12 months. We can use that school history to make up the 2 years that are going to be needed. Now, if you have a side hustle or you're doing any other kind of second job, all of those things have to be documented and need to have a 2-year history. So anything that you get in cash, if you have a side hustle, you'll want to report that on your tax return so that we can see a 2-year history of those earnings, and then we can use it. If it's a part-time job, then same rule applies. We'll want to see a 2-year history and consistent hours for that second job in order to use it for qualifications. Now we have assets. So down payments can range depending on your situation. For today's purposes, we're going to talk about a primary residence down payment. There's different down payments associated with occupancy, whether you're going to live there or you're going to buy it as an investment. But down payments start as little as 0%. There are zero down loans, and those come with a lot of different rules. There's usually income restrictions. You can't earn too much. Credit score has to be high, and you can't have money saved that's more than like $100,000. Then you won't be able to qualify for it. So there are those types of programs available, and we can always schedule time after this to discuss those if you're interested. But your typical down payment is going to start at about 3.5% and range up to 20% down. It is very rare that you're going to get told you need to do 20% down out the gate. Most of the times, our first-time home buyers are looking for affordability, which usually means the lowest payment monthly with the lowest interest rate, right? So you're looking for both of us maximize both of those things for you. So we're not going to prescribe that you need to do 20%. You can do as little as 3.5%, and in some cases 3%. So think of a mortgage as kind of prescriptive. Like when you go see a doctor and you tell them, hey, I've got A, B, C, D symptoms, and then the doctor runs their tests and then they come back to you with their findings. It's the same thing with a mortgage. And so we can get detailed on what your required down payment would be and what options are available to you. And if you have, any generous family members or parents that want to gift you money, that is absolutely allowed. Just don't exchange any funds prior to the close of the transaction. Always let me instruct you on when and how to do that so that the paperwork is in order and it's seamless for you when you go through the transaction. Any funds that you have at home that might be cash, you need to make sure they're deposited slowly into the bank, because all funds that are used for the home purchase have to be a verified source, meaning it's already been sitting in a bank account for at least 2 months. All right. So now we're going to put all that together. We've covered credit, income, and assets. We talked about a down payment. So down payments are going to vary depending on the type of property that you buy. And the program that's used. So we can talk about that for your specific situation when we meet. Closing costs are another thing that you'll have to pay apart from your down payment. And closing costs range anywhere from 1.5% to 2.5% on top of that down payment. But one of the beauties of buying a home is if you have an excellent agent like Mickey, then they can help you with getting some kind of credit or adjustment for that. So I'd love Mickey to touch on that real quick.
Yeah, absolutely. So with a lot, not all, but a lot of my first time home buyers, depending on the house and depending on how many offers are on that house, we will ask the seller to pay our closing costs. That's part of the negotiating that I'll do on behalf of the buyer. So what that means is basically, both parties have to pay closing costs. So the seller pays their fees and the buyer pays their fees. So when we ask the seller to pay your closing costs or give you a credit, then the seller's basically covering your fees for you. And it does work out pretty often. I'm been pretty successful asking sellers to cover those costs.
I'd have to agree with you, considering we've worked together a few times now, many times, and you've always been able to garner that seller credit for your client. All right. So now moving on to questions and answers.
Yeah, so I think there's a few commonly asked questions. When you and I are meeting with buyers, some things tend to come up. So the first one is with regards to credit is, so are you saying that I can continue making minimum payments and that will still allow my credit score to go up?
Yes, as long as your balance hasn't exceeded the 30% of the maximum limit on that card.
Okay, great. And then I think I saw it on one of your charts, but can you review again what's the best score I need to have? Was it 780?
780 is a top score.
Okay. And that means that if I have the best score, then I could qualify for the best rates.
That's correct.
If I get the best rate, then likely for this house, either I have more buying power or I can also, maybe I don't want to have more buying power. Maybe this is where my budget is, but I'm going to get the best payment.
Exactly. Yeah. So the best rate equals a lower payment or more buying power.
Perfect. And then should I pay off all my bills before I buy a house?
Not necessarily. Make sure you're talking with your lender about how much you want to qualify for. So if we give you an amount and you say, really, that's not as much as I was hoping for, then we can explore paying off some of the accounts that you might have to extend your purchase price power. But don't do it prior to.
Right. So would you expect that if this is a common question, my buyer is wanting to fill their new home with furniture and buy a new washer and dryer and a refrigerator, would you expect me as the buyer to be always in contact with my agent and lender? Speak to that, please.
Absolutely. Before you go out and purchase anything for your new home, I know it's exciting, especially when you hear your loan's approved and you're getting closer to loan documents. A common killer of the deal is going out to buy the appliances, the washer, the dryer. So make sure you're talking with your lender first to see if it's go time to be able to do that. We do monitor your credit until the day that the loan actually closes. And it's for that reason to make sure you're not buying another house at the same time.
And I would say with my experience as a realtor that you just, number one, I'm going to say it this way, stop spending. But really the truth is spend money like you normally would. Don't do anything out of the ordinary. I had a client one time that said, so what you're saying is my giant Target runs that I take with my kids, like I can still take those, right? Yeah. Like if you normally go to Target every week or every month, then do what's normal, but don't do anything out of the ordinary. If you normally spend $50 at Target or $100 at Target a week, and now today you want to spend 500, no. You can wait till escrow closes. So one last question that I have for you with regards to credit. Should I close my accounts? Does that make my score go up?
No, that actually affects your score to go down. So you don't want to close any credit cards because it erases or stops the reporting of the data. So if you have a credit card you've been paying on time and you decide to pay it all off and close it, all that data is gone, that history. So it will affect you negatively. Installment loans are different. Those have a beginning and an end. So when they end, it doesn't affect your credit negatively, but always keep your credit cards open.
Yeah. Those are just some common questions I've heard over the years. And especially that last one, people think they're doing the right thing. Oh my gosh, my credit is great. And I just closed all my accounts. I don't know why my score went down 100 points.
Yeah, those are
What
good
did it?
questions.
Yeah, you want the history. All right, so let's review. We did our 10 easy steps to buying a home. We talked about how you can improve your credit. The best thing to do is just make your payments on time. If you do have balances that are greater than that 30%, that Angie talked about, pay it down and get it below 30%, right? Angie, you talked about the CIA method. We talked about how the loan process works. And then we didn't really talk about how to build wealth through real estate. But another common question that I get from buyers is, what is equity? And I mentioned equity at the beginning. And equity is that amount of money that your house is working for you. I'm going to put it this way. You go to your job every day and you work. You, the human, you're making money. I look at it like three buckets. You, the human, you're working for money. Now, the second bucket is your money is working for you because you probably have a savings account or maybe even a retirement, a 401k, something like that through your company. So the second bucket is your money is making money for you. When you buy a home, it's like a third bucket that's making money for you. So every year your home value goes up 5%, 10%, whatever it is for that year. That's money in your buckets, as well as you paying down your loan. Your mortgage amount is being paid down. You get your tax savings. So your bucket is growing and building your equity for your future. And I have had many clients throughout the years where they started out small. They bought a 1-bedroom and then bought a 2-bedroom condo, maybe even a 3-bedroom. And then they took their equity and built and bought I said builds, but they bought their dream home. So that's something that we're seeing here in Southern California. Instead of starting with that dream home, we're seeing those building blocks to get to your dream home.
Yes. Equity is super helpful, not only for, as Mickey says, building wealth, but if you are thinking about purchasing another property down the road, you can either leverage the equity in your home by borrowing from it to buy another property if you'd like, or maybe you want to upgrade your home and add another bedroom or a swimming pool, or you never know. And you can take that money from your home to do those things. So building the wealth and that equity is huge when you think about it in terms of investment, because you don't really have other investments outside of possibly retirement that are going to grow for you like that.
Yeah. Yeah, so that's it. If you guys have any other questions, you can absolutely contact us. There'll likely be a description below. We appreciate you guys watching. I hope this webinar has been advantageous for you and you understand the process, not only to buy the home, but to get the loan and to get started in going shopping to find your dream home. We'd love to hear from you. Thanks so much for joining us today.
Thank you.